Here's a summary of PDD Holdings Q1 2026 earnings call, focusing on key financial metrics, management's outlook, risks, and important statements, suitable for reading aloud. Start reading. Good morning, everyone, and thank you for joining PDD Holdings first quarter 2026 earnings conference call. Overall performance and strategic focus. PDD Holdings is embarking on its second decade, marking a critical year for organizational and cultural reinvention centered on high-quality development. The company is committed to driving deep transformation across its business lines, internal processes, and management, prioritizing safety, compliance, and social responsibility. PDD aims to create positive value for users, the industry, and society. The company has entered a new phase of its three-year strategy, building another Pinduoduo, with a strong focus on its new first-party brand business and supply chain enhancements through innovative models and investments. The $100 billion support initiative continues to deliver value to merchants and the broader industry, with accelerated rollouts of free shipping to rural villages, enhanced platform governance, and proactive social responsibility measures. Key financial highlights for Q1 2026. Revenue. Total revenue for the quarter reached 106.2 billion renminbi, an increase of 11% year-over-year. Revenues from online marketing services and others were 49.9 billion renminbi. Revenues from transaction services showed significant growth, reaching 56.3 billion renminbi, up 20% year-over-year. Cost of revenues increased by 15% year-over-year to 46.9 billion renminbi, driven by higher fulfillment, bandwidth, server, and payment processing fees. Operating expenses. GAAP operating expenses were 39.8 billion renminbi, a slight increase from 38.6 billion renminbi in Q1 2025. Non-GAAP operating expenses increased to 38.3 billion renminbi from 36.5 billion renminbi in Q1 2025. Non-GAAP operating expenses, as a percentage of total revenues, improved to 36% from 38% in the prior year. Non-GAAP sales and marketing expenses were 33.4 billion renminbi, a modest increase from 32.8 billion renminbi in Q1 2025. As a percentage of revenue, this decreased to 31% from 34% last year. Non-GAAP research and development expenses saw a substantial increase of 32% year-over-year, reaching 4 billion renminbi. Profitability. GAAP operating profit grew 22% year-over-year to 19.6 billion renminbi. Non-GAAP operating profit rose to 21.1 billion renminbi from 18.3 billion renminbi in Q1 2025. Non-GAAP operating profit margin expanded to 20% from 19% in the same quarter last year. GAAP net income attributable to ordinary shareholders was 12.5 billion renminbi, down from 14.7 billion renminbi in Q1 2025. Non-GAAP net income attributable to ordinary shareholders was 14.1 billion renminbi, down from 16.9 billion renminbi in Q1 2025. Non-GAAP diluted earnings per ADS was 9 renminbi and 51 cents, down from 11 renminbi and 40 cents in the prior year. Cash flow. Net cash generated from operating activities was 16.4 billion renminbi, an increase from 15.5 billion renminbi in Q1 2025. Cash position. As of March 31, 2026, the company held 436.1 billion renminbi in cash, cash equivalents, and short-term investments. Key strategic initiatives and investments. First-party brand business. A dedicated company was established in March with an initial injection of 15 billion renminbi and a plan to invest 100 billion renminbi over the next few years. This initiative involves deep dives into industry hubs to consolidate supply chain resources and collaborate with global IPs for co-creation of new brands. The goal is to systematically incubate globally recognized brands and drive supply chain transformation. $100 billion support program. Continued high levels of investment in initiatives such as premium agricultural produce programs, new quality supply, and logistics support to remote regions. Agriculture. The 2026 Due Premium Products program was launched, deepening support across the entire value chain, from planting to deep processing. Initial phases are underway in specialized regions. Industrial growth. Initiatives in manufacturing hubs are shifting factories towards a consumer-centric, R&D-driven model, enabling them to build their own brands and become automated smart factories. Logistics to remote regions. Significant cost reductions in shipping to western provinces, over 30% annual growth in order volumes for some merchants. Direct-to-village initiative, rolling out full speed, achieving over 70% village coverage in some Hunan counties by March, creating local job opportunities and revitalizing rural economies. Platform governance and compliance. Over 20 food safety measures were launched in Q1, alongside enhanced compliance inspections and automated monitoring. Turnaround time for addressing store violations has been reduced to hours. Management's outlook and forecasts. PD's priority remains long-term value creation through sustained investments in the ecosystem and supply chain, rather than focusing on short-term results. The company views the current phase as an opportunity to build new teams, systems, and culture. Future investments will resolutely advance the first-party brand business and deepen supply chain capabilities. The objective is to build another Pinduoduo over the next 3 years and drive the transformation of the entire supply chain. Significant risk factors. While not explicitly detailed as risks, the transcript highlights several challenges and areas requiring deep transformation. Supply chain constraints. Many manufacturers face limitations in talent, information, and scale, hindering their brand transformation and leading to homogeneous competition. Organizational and cultural reinvention. The company acknowledges the need for deep transformation in its organization and culture, indicating ongoing internal challenges to address. Intense e-commerce competition. The industry is characterized by rapid evolution, intense competition, and low switching costs for consumers. Regulatory environment. The platform needs to strengthen compliance capabilities in an increasingly complex regulatory environment, especially with brand development. Key statements from management. Jiajun Zhao, co-chairman and co-CEO. This year marks the beginning of PDD's second decade, a critical year for the complete reinvention of our corporate organization and culture, which is centered on the high-quality development in the new decade. The supply chain is currently facing challenges. Many capable manufacturers are constrained by factors such as talent, information, and scale and have not yet completed their brand transformation, leaving them trapped in homogeneous competition. Through the first-party brand model, the platform assumes greater responsibility and takes on more risk, enabling our industrial partners to concentrate on high-quality production. We believe this is necessary to propel the platform and the entire e-commerce ecosystem into the next stage of high-quality growth. The online retail market continues to hold great potential, and there is much more we can do. However, the industry has entered a critical phase of high-quality development. The only way to realize sustainable and healthy industry growth is to take initiatives to deeply empower the supply chain. Product selection, competitive prices, and better services will remain important. As we mentioned earlier, competition among different platforms ultimately comes down to competition in underlying supply chain capabilities. Chun Lei, co-chairman and co-CEO. This quarter, our global business continued to grow at a steady pace, opening great market opportunities. We believe the key is to return to the roots of e-commerce, which is supply chain capabilities. Brand development is the next major opportunity for supply chain upgrades, which gives us conviction in the first-party brand model. From the impact and a deep sense of duty, we move forward with a firm belief that staying true to our roots is the fundamental prerequisite and a guiding principle for all our future undertakings. David Liu, Financial Director. Our objective is the long-term sustainable growth of the platform's intrinsic value. Instead of optimizing short-term financial performance, we prioritize the healthy development of the platform ecosystem and the accumulation of supply chain capabilities. A sustained, store-specific competitive advantage will determine the trajectory of the platform's intrinsic value. Lowlights: net income decline. Both GAAP and non-GAAP net income attributable to ordinary shareholders saw a year-over-year decrease. Earnings per ADS decline. Basic and diluted EPS on both GAAP and non-GAAP bases were lower compared to Q1 2025. This indicates that while revenue grew, increased investments and costs impacted profitability on a per-share basis. Forward-looking statements and guidance. The company has not provided specific quarterly guidance for future periods in this transcript. However, the overarching strategy clearly indicates a sustained commitment to significant investment in the supply chain and the first-party brand business, suggesting that operating expenses and investments will remain a key focus, potentially impacting short-term profitability in favor of long-term growth and structural improvements. End reading.